So I've thought through what can be done. We have limited time available. How do I maximize it for you? That's the whole thought I had yesterday. So I thought like we will do a reverse order revision. Like there are questions on amendments throughout from the RTP. So we'll take RTP, we'll discuss a question. Wherever a question is talking about a concept, we'll go revise the concept. So you get both question and you will get the whole RTP covered, like some 20 solid questions which are new. Like if you have not gone through RTP, you would not have come across these questions, and these questions touch upon new concepts that we can revise. Shall we do that? So that you get not just one chapter, you get an overall idea of all the chapters, like something from customs, something from here, there, everything is covered, right? Okay, so let's look at your May 24 RTP. Do you have the RTPs with you? You don't have. Okay, so maybe if you can just take it from the BOS online. If you want to look at the mobile phones, you can look at or the screen, either way. But I'll recommend you have the PDF also with you, so that if you want to go back and forth with a question, you will be able to do that. Also, whatever we have discussed in terms of yesterday, I have put it onto the free resources, the chart I have uploaded there. I've added, copy pasted some of the chart that I have not discussed as well, so that you can look at those charts in one go. Wherever you need that chart, you don't have to worry about it. Okay, so the RTP contains 2 case studies, MCQs, then we have some computational questions, but it covers broadly a lot of concepts, so we will have to go back and forth and understand all the concepts. Shall we? Okay. You all have the question with you, right? I'll read the first case study scenario, question number 1. So we have like 5 questions. What is that we have discussed about approaching a case study? What is the order we have discussed? We said we will first discuss the questions, then go to case study, then come back to the questions. So that's the same order. We'll try that order here. So there is a case study. Based on the facts of the case scenario given above, choose the most appropriate answer for question 1 to 6. So they're asking 6 questions. So each question would generally carry 2 marks each for a computational question. Which of the following activities or transactions undertaken by Daira Limited do not amount to supply? Okay, so what is not supply? So there must be something that is supply that is not supply in the case study. They're saying supply of steel sheets in territorial waters. Supply in territorial waters. They're trying to test you the concept that you have in section 9 of IGST Act. Section 9 of IGST Act talks about if there is location of supplier or place of supply in territorial waters. Where will I take the location of supplier or place of supply as? Say in Pondicherry, Tamil Nadu border, in the territorial water, somebody goes on some activity. Which state I should take? They said nearest baseline. Okay, that is what they are trying to ask here. Computer being used for business purpose, given free of cost to unrelated person. This is testing schedule 1, para 1. Permanent transfer or disposal of business asset where ITC has been already claimed without consideration would become a supply. So we'll have to look at if there is ITC availed or not. Supply of paper rolls to printing of question paper to Ford Mount Senior Secondary School. This is already there in one of your previous questions from the institute's RTPs. The concept is, if you look at exemption, in exemption, there are 3 categories of educational institution which will get exemption. One is educational institution who are doing classes from preschool till high secondary. Second, institution having a curriculum recognized by any law in India. Third one, vocational training institute. There are 3 services provided to first category, that is preschool till high secondary, which is exempted. 4th service is exempted to all of them. 3 services: transportation, catering, and housekeeping, including cleaning and all that inside the premises. Okay. Then services relating to Any services relating to conduct of examination or admission to all type of education institutions are exempted. This is what it is there. Now look at this. They are giving you supply of paper rolls. Paper rolls are goods. Would you get exemption if the wording is any services in relation to examination provided to schools are exempted. Here they have given you goods that will not be exempted. That's something that is being tested in another question also. Then recovery of bond amount from outgoing managing director. This is coming from liquidated damages circular. Liquidated damages, there is a marathon circular that we have in supply chapter which was talking about whether bond payment of a notice period employee would be amounting to a supply. They said no, because the amount collected by the company from a employee for not serving contract period is not having an agreement to tolerate. Okay, they're saying that there is no explicit or implied contract which would say that you can leave early and I will tolerate. So thereby this would be more like a liquidated damages and it will not amount to supply. Okay, so these are the points that we had there. So you have to decide what is not a supply. Okay, we will come back to that. Then which of the inward supply received by Daira Limited in the month of April are taxable under RCM? We have discussed RCM yesterday, so you should be easily able to talk about this. Services received from independent director. Yes, we know that independent director to companies under RCM. Accommodation services from Hillwood Hotel, Mumbai. No. Services of arbitral tribunal. Yes. New machinery purchased from dealer based in Cochin. No, there is nothing like that we have discussed. Salary paid to employees, not even a supply. Third question is, you have to compute total GST payable on outward supplies before setting off ITC for the month of April by Daira Limited. You are supposed to compute your outward tax liability. That's also part of the question. Then compute total ITC admissible to Daira Limited for the month of April. You have to compute your ITC eligibility also. Then whether GST is applicable on the event organized by Doom Events Karnataka for Daira Limited in Dubai, and what is the place of supply? They are asking a question from place of supply. And place of supply provision on event, organizing an event, is discussed under section 12 if supplier and recipients are in India. Subsection 7 of IGST Act, 12 subsection 7. Okay, it says if it is B2B, it will be location of recipient. If it is B2C, if the event is in India, it will be location of the event. If the event is outside India, it would be location of the recipient again. Bring it back to India. 12, when supplier and recipient both are in India. Okay, so that is something that they are testing you. Then how shall the amount paid towards training expenses of employees of Daira Limited be treated under GST law? So some training expenses question is also there. These are the 6 questions. Now when you're reading it for the examination, you read it very quick. Then you go back to, okay, so you know that there are multiple questions. Now you go back to the paragraph. So it's a large case study. We will start reading it. So it says, Daira Limited India is registered supplier under GST in the state of Kerala. So we have understood they are from Kerala and is engaged in supply of goods and services. Daira Incorporation, San Francisco, USA is a subsidiary of Daira Limited India. Is engaged in supply of information technology services to customers in US. So this particular Daira Limited in India has Daira Incorporation in US to provide services to customers in US. Daira Limited India has undertaken following transaction during the month of April. First, we will analyze each transaction and then make understanding. Okay. First, supplied large paper rolls to Ford Mount School, Bangalore for printing of question papers as directed by the school. Daira Limited delivered the paper rolls at printing press located in Trivandrum, Kerala. There are multiple understanding that is required here first. Okay. I will make the understanding about all of this. First, the supply is made to whom? Ford Mount School. Okay, Ford Mount School is coming under preschool till higher secondary. Fine. But they are supplying paper rolls, which is goods. So would you get exemption? No. Then, so this is taxable. What taxes would be applicable? What is the location of supplier? Kerala. Supplier is Daira, right? Daira Limited supplied. They are located where? Kerala. Then, what is the place of supply? No. Because when goods are involving movement, your section 10 subsection 1 clause B should be applied. What is section 10 1B says? Correct. If it is in the direction of this is your 10-1. Okay, this is your 10-1. We have 5 clauses there. An amendment is also happening called as clause CA, over the counter purchase and then transportation. So when you do place of supply for goods, the thumb rule that you have is follow the goods. Now wherever the goods goes, that will be the place of supply generally. First, supply involves movement of goods, location where the movement terminates for delivery, that will be the place of supply. Follow the goods. When it does not have movement, where I delivered it, where did I hand over the product, location at the time of delivery of goods, follow the goods. However, if I am located in Chennai, on my direction, goods are being sent from Bangalore to Kerala, place of supply would be my location, because I am the one who wants to take credit. Okay, this invoice is called as bill to ship to invoices. In bill to ship to invoices, place of supply will be bill to address, not ship to address. That's what is given here. Look at it. Supply involves movement of goods and delivered to recipient on the instruction of a third person before movement or during movement. Bill to ship to invoices. Principal place of business of such third person would be the place of supply. Let's revise the rest also. When I already told you yesterday 10.1d, which is supply involves installation or assembly, location where it is installed would be the place of supply. E talks about goods supplied on board a conveyance. Goods supplied on board a conveyance, what will be the place of supply? They said, where did you take the goods into the vehicle? So it says, location where such goods have been taken on board. From Chennai to Howrah, if there is a train that is traveling and a catering company which is selling packed food in the train gets into the train from Vijayawada and the customer buys the product in Bhubaneswar, place of supply would be Vijayawada, further goods are taken on board. Okay. Now, amendments we will look at after we discuss this question. Now, coming back. So, what will be the place of supply here? Place of supply would be location of third person, which is Karnataka. So what supply is this? Location of supplier Kerala, place of supply Karnataka, it will be IGST. What is the GST rate that is given in the question? Let's look at. All GST rates are 9, 9 and 18. So what will be the GST if it is 18% IGST? 2,70,000. Second, bond amount recovered from outgoing managing director residing in Kerala of Daira Limited since he had left the employment before contract period. Let's look at that corresponding provision also. Look at the circular, fourth point, everyone. Forfeiture or salary or payment of bond for not serving contract period. It is entered, this contract itself is entered to discourage a non-service candidate to take up employment. It does not constitute a consideration. The question is that whether it would be treated as an agreement that the employer has. That the agreement says, employer would say that I will tolerate you leaving early during your bond period, you pay me this much of amount. Never the bond would say like that. The bond would say the other way around. The bond would say you should not leave employment during the bond period. When will be toleration be taxable? Only when there is an agreement to tolerate. I'm telling a hawker, peddler shop which is in front of my supermarket, I'm having an agreement with him saying that you be here, have no problem, pay me so much of amount. That is an agreement to tolerate. Here I'm saying I will not tolerate. Any liquidated damages, you don't finish my houses within 6 months, then you have to pay me this much of amount. It's not tolerating. I'm saying you finish. It is not to tolerate. That agreement will never constitute a supply. Likewise, there is a clarification on this. They are testing the same thing here. They can test you anything other than that. You think about what kind of question, any other point there can come. Are you guys with me? Shall I show you one quick summary of it? Can we just do that? Okay. I have made a summary in another discussion. Now I'll show you the summary. Look at this. A photo or something would actually work for you. Look at this. I said, what is supply, what's not supply? Full summary, I've kept it. From the entire circular, what and all is there? Non-competency contract. There is an agreement wherein I would say, I would refrain from acting. So that will become a supply of service that is taxable. Refraining it is. Contract to not construct additional floors to not block sunlight of another project. That is also supply of service. Because there's an agreement saying, Skyline is saying that DLF, please don't construct another 6 floors, it will block my sunlight. Then DLF is being paid some amount. Okay, so that contract is specifically to refrain, that's supply of service. Tolerating a hawker or peddler shop in front of another shop, that is also a supply of service because there's an agreement to tolerate. Lump sum amount paid by a residential welfare association RWA for zero emission measures to an industrial unit would be an agreement to do an act. I pay you so much of amount, you please do additional zero emission measures is a supply of service. However, liquidated damages to property damage, piracy, IPR, not constructing the houses, damages, all of these are not a supply. Penalty for delayed construction, not a supply. Forfeiture of earnest money, if somebody is not executing the bid after paying the earnest money, I forfeit the earnest money is not a supply of service. Because I will not be saying somebody, you win the bid, then don't pay, it's okay. I'll take this money and I'll keep it. No, they'll say you have to pay the entire bid amount. I only got earnest money now. So that is not a contract for supply of service. Then check dishonor penalty. Look at the next bunch. Check dishonor penalty is not a supply because you pay check dishonor penalty does not mean bank tolerated you issuing an invalid check. There is no toleration there. Penalty for violation of laws. You paying 500 rupees for not wearing a helmet does not mean that government is tolerating that as a service. No. Payment of bond or notice period penalty to employee is not a supply. Late payment charges are an incidental charges for the principal supply. Interest, late fee, it's an incidental charges. It will be added to the value. We've already seen 15(2)(d). Then, forfeiture of advances on transportation or tour. You book a flight ticket, you cancel it, there is forfeiture of some advances that is happening. You book a tour packages, they will forfeit the advances. There is a clear agreement saying that you can cancel, I will take this money. So that will become a supply of service and it will be taxed in the original supplies rate. You cancel flight, cancellation charges would be taxable in the same rate of the flight GST. Then, fixed charges on electricity. There was a confusion. You have to pay fixed charges even if you don't use electricity. Is it something that you pay to the electricity board for you not using the electricity? Tolerating you not using? No, it is electricity charge only. Electricity charges, distribution or transmission of electricity is exempt under exemption notification will equally apply for fixed charges also. That's a clarification. Early termination of lease would become a supply of service because normally early termination of lease would be mentioned in the contract. You are permitted to early terminate by paying this much of amount. Similarly, prepayment charges on loan, generally there will be a clause which is letting you to pre-closure the loans. These are considered to be supply of service as per the circulars. Now coming back to our question, is it supply? Not a supply. Third case. Supplied steel sheets in territorial waters to Dhruvank builder located in 12 nautical miles from the baseline of Kerala, 15 nautical miles from the baseline of Tamil Nadu. Which is closer? Which is closer? 12 nautical miles. Kerala is closer. So it will become what supply? Location of supplier would be Kerala. Place of supply would also be Kerala. So what GST would come? CGST, SGST would come. So how much will be that? 9% CGST, 9% SGST. 54, 54? Am I correct? So we are referring back to section 9 of IGST Act here. With me? Ideally it would be, it is not yet clarified, but it is treated as a penal charges and it is subject to GST at this moment. Okay, they are saying that RBI there is specific permission there that you can levy them charges and it would be like a charge that you have a commitment, you are permitted to go below and pay this particular charges. That will be there in the charge sheet itself when you sign on the thing. So that is currently being taxed additionally. But there are banks which will use the terms liquidated damages to exit out of the charges. Yeah. That is the circular that we just read. We gave you a bunch of details, right? These are all liquidated damages. Do you want me to explain you that a bit? Supply. Well, do you others also, because you have to be thinking about the time. Can I explain that for another 2 minutes? Can I? Okay. I'll quickly tell you that exactly that point only I was discussing with the earlier discussion that we had. I'll just quickly put it across. What is the understanding? This is a circular that we have. Okay. Now, the provision that the circular clarifies is that section 7 subsection 1a schedule 2 para 5e, okay, which is talking about there is a deemed supply of services. The deemed supply of service says that agreeing to an obligation to, the deemed supply of service talks about these wordings, agreeing to an obligation to refrain from an act, to tolerate an act or situation, or to do an act would be considered to be supply of service. Now they're saying if you analyze this particular sentence, you should understand to call something as supply of service, two conditions are to be satisfied. What are those two conditions? One, there must be an expressed and implied agreement or contract. Means what? there must be an expressed contract, and the contract must be the reason for consideration, which means what? If I am having a contract for refraining, the contract should say that I agree, or you are not supposed to, you should refrain from providing services to any other competitor for next 5 years, I'll pay you this much amount. This is an agreement to refrain. There must be an agreement to tolerate. I tolerate. The supplier should say that I will tolerate you for X and Y things. Okay, the expressed meaning is that the contract should be for toleration. Now look at what is liquidated damages. Say, I'll give you a classic example that I give it in the classes. Say, I'm giving my flat for rent to a film crew, and I have a terms and condition, because my daily rent that I collect from the film crew is around, say, 50,000 rupees. It's a luxurious flat, okay, in Hyderabad, and I use it for all the film shooting. I have agreement saying that you should not break any items in my house during the shoot, but if at all anything happens, you will have to, I will charge you the money, that is compensation will be charged on you. It's like a penalty. Now question is, one of the film crew broke an item which is worth 50,000 rupees and paid me 50,000. Question is this considered to be a service of tolerating them breaking my item? No. To call this as an agreement for toleration, what should my agreement wording should be like? I will expressed, I will tolerate even if you break, and I will get 50,000 from you. What is my contract? You should not break. Am I having an expressed contract for toleration? No. My contract says I will not tolerate. That will not become a supply service. Liquidated damages are not for toleration. These are for execution. I want you to construct my house in 6 months. I want you to do this bridge in 6 months. I want you to build the metro in 1 year. These contracts are for execution. Would they say that it's okay if you delay by another 6 months, you pay me this? No, you should not. The moment you hear the word you should not, that will not become a supply. Make sense? That's what is the understanding of liquidated damages. Correct. It is the same characteristics of liquidated damages. The only thing, we don't call liquidated damages the term for everything. Liquidated damages are generally a money value or measure of losses. Contract bond payment is contract bond payment, has the same treatment of liquidated damages under GST. Like both are not supply. That's why we have listed a bunch of items, right? What is supply, what is not supply. All of these are part of activities mentioned in that circular. Clear? Okay. Always look at, is that contract? Likewise, look at the toleration of, say, supermarket giving, letting a peddler to be there. My contract, is it saying that you should not be there? If I see you, I will charge you 5,000? No, I tolerate you, be there. Then GST would be applicable. Then, received advances for future supplies of goods from a customer based in Kerala. What is advances? I have told you this particular point, but I'll quickly show you the notes also on the. This is coming from where? Time of supply. Your time of supply provision is what we are testing here. What is the time of supply talks about? Let me recap. This is time of supply for you. Okay. Time of supply provisions has two sections, okay, which is section 12 and section 13. Okay, and section 14 is talking about something else, change in effective rate of tax. Section 12 and section 13 has these many subsections. Subsection 6 is something that we have already seen in value. We said when there is an interest, time of supply would be the date of interest, right? Subsection 2, 3, 4, 5. 2 talks about time of supply for supplier FCM. Now subsection remains the same for 12 and 13. If it is goods, FCM, 12 subsection 2. Service, FCM, 13 subsection 2. Subsection 3 talks about RCM, 12, 3, recipient of goods. 13.3, recipient of service. Subsection 4, voucher. Subsection 5, residual cases. Very simple understanding. Now let's look at how do I fix time of supply for supplier of goods and supplier of service. This is the chart for that. It says time of supply would be earlier of date of invoice or due date of invoice. Date of receipt of payment is omitted. So when you are a supplier of goods, earlier they made applicable both goods and service the same provision, and they understood later nobody in goods were paying taxes on advances, so only for services advances would become taxable in the month in which you receive advances, because in advances they ask the question, did you issue invoices within 30 days? If the answer is yes, you compare invoice and payment. If the answer is no, you compare completion date and payment, take whichever is earlier. So in terms of advances, we can put it like this. In terms of services, if you receive an advance, time of supply would be advance date. In case of goods, if you receive advance, that I have written the provision when it is omitted, how is the relevance of that provision? Impact. In case of advances received for supply of goods, time of supply will be determined under section 12.2a. What is 12.2a says? Invoice or due date of invoice. Say I receive advances for goods in January, I issue invoices in February, I pay taxes based on February only, not January. That's understanding. For whom? For goods. For services, it would be January itself where I receive an advances, and we will generally assume it to be inclusive unless the question gives you otherwise. Nothing, no goods, inter, no relevance for that. Only in one cases now we consider. I'll tell you what is that case. Actionable claims. You remember? If you put money in Dream 11, 6 specified actionable claims. If you put money in Dream 11, when would I pay GST? When would Dream 11 pay GST? What's the time of supply for Dream 11? Is the time of supply the date of advance deposited, or it is the date in which it is utilized for paying? But it's goods, no? Goods advance is not considered, right? They made an amendment there. They said except for actionable claims, because actionable claims I want taxes at the time of deposit. Okay, so they have made an understanding. Date of receipt of payment, notification 66 was modified and said other than CLS cases, other than specified actionable claims. So only in goods where it will become CLS, we are not paying taxes based on that, we are paying based on the turnover. But in case of specified actionable claim, that's the only goods wherein you will pay taxes based on receipt of advance date. Okay, now coming back to our question, see, look at, they are saying that this particular supplier, which is a supplier in the state of Kerala in the month of April, they received an advance for goods or services. For goods, would it be having a time of supply? No, time of supply would be what date? Invoice date. So will I add it to the GST liability for this month? No. This will be added to the liability only in the month in which 12.2a, invoices or due date of invoices. So we'll ignore this. Which section are we referring? 12 subsection 2. Okay. So we can even put the notification here. Notification 66 bar 2017. Then, what about advances on services? What will be the time of supply for advances on services? It will be the date of receipt of advance. So this would be taxable. Is it intrastate supply or interstate supply? Intrastate supply, because the recipient is also in Kerala. So place of supply is Kerala. So location of supplier, place of supply, both are in Kerala. So what will be the CGST, SGST on 4,90,000? Let's look at, see, if the question does not talk about exclusive or inclusive, we will have to treat this as inclusive. So but then here specifically given all the amounts are exclusive. Please remember, advances, if the question does not be in silent, we will assume the advance to be inclusive. Okay, other than advances, everything is exclusive assumption. So how much will be CGST, SGST? Can you tell me? 44,100, 44,100, right? Next, Computer used for business purpose on which no ITC has been taken yet. No ITC is taken. We have already seen the question. Is it a supply? The question is given free of cost to unrelated person based in Kerala. This was purchased 2 years back at a price of 1,12,100 including GST. Open market value 75,000. Is it relevant? No. Why? It's not a supply. If it was a supply, let's look at this. What if they were taken ITC? What if they have taken ITC? Yeah, we will have to compute the value. Okay, we will have to compute the value and then pay the GST on it. So we'll have to look at two comparisons. What is the open market value? What is after 5%? We will have to see whichever is higher needs to be the one that needs to be paid on these particular things. So we don't have it being a supply at all there. Understanding? Yes, it will become a supply. Yeah. Yes, yes. Yes, it will come under schedule 1. So in case of related person, there is no concept of whether I have taken ITC or not taken ITC. This would not come under schedule 1 para 1 because no ITC was taken on the asset yet. That's why they have specifically given unrelated person. Are you guys with me? Okay. Then they're also giving you additional information for the month of April. 1, company paid sitting fees of 6 lakh to an independent director based in Cochin, Kerala for attending meetings. It would be taxable under a reverse charge mechanism. What will be the RCM liability? The director is also based in Cochin, so it will be what liability? CGST, SGST, 54, 54. Correct? Then, now can I take ITC of this after paying under RCM? Yes, I can take ITC. Okay, I have to pay the liability, then avail ITC of the same. Tax payable under RCM cannot be paid by utilizing ITC, but once paid by electronic cash ledger, it can also be availed as ITC. Room charges for 2,25,000 were paid to Hillwood Hotel located in Mumbai, Maharashtra for stay of CEO of the company on the business trip. Question: what will be the location of supplier here? Mumbai, because that's where the hotel is there. Okay. Then, okay, Mumbai. Then, what is the place of supply? That will also be Mumbai. Why? Because it will come under 12 subsection 3. Location of immovable property would be the place of supply for this. Can I take, so what GST would come? CGST and Mumbai SGST. Right. Will a Kerala registration be able to take ITC of this? No. Because this will not be available as ITC because the place of supply happened to be Mumbai. Are you guys understanding? It will not come under your 2B also. Are you guys understanding? So your hotel bills, accommodation, ITC will be available only if it's in the same state. Okay. So this is testing you the concept of place of supply. They said that it is the business trip and all that, but location of supplier and place of supply here is in Mumbai because place of supply will be determined under which section? 12 subsection 3 of IGST Act, which says what? There are 4 type of services relating to immobile property that will be having place of supply also as the location of immobile property. Look at this. Service in relation to immobile property, boat or vessel. Okay. First service is ARIES service, I've told. Architect, interior designer, real estate agent, engineer, surveyor. service of giving grant to use the immobile property, or coordinating the construction work, or accommodation services, or giving an accommodation for conducting an event. It could be a social event, business event, whatever. So say for example, a auditorium is given on rent. All of this, place of supply would be location of immobile property, boat or vessel. So here the immobile property is in Mumbai, thereby it will not be available as ITC, because the GST would have been CGST, SGST of another state. The company avails service of an arbitral tribunal in Cochin to settle a business dispute. This would be taxable under RCM. Again, arbitral tribunal is also in Cochin, so out GST would have come CGST, SGST. How much would have been CGST, SGST? 63,000, 63,000. Can I take ITC of this? Yes. Will they get any exemption here? No, their previous year turnover, there is no information given. You remember, arbitral tribunal providing services to a small business entity, there is an exemption. Okay, there's no information for that, so we'll assume that is there. Salary paid to the employees on payroll will come under what schedule? Schedule 3, para 1. It is not a supply. Company purchased a new machinery from a dealer based in Cochin, Kerala for 12 lakh. Depreciation has been claimed under the Income Tax Act on the same, including all applicable taxes. 16 subsection 3 in ITC chapter says that if you have taken depreciation on the tax component, then ITC will not be available. Yes, you will be able to distribute that particular services across. Take any ITC, correct. Then, in the month of May, Daira Limited sent a team of 25 employees to San Francisco for receiving training in emerging information technologies. The training was given by Daira Incorporation USA as its office located in San Francisco. The expense related to training was paid by Daira Limited to Daira Incorporation USA. What is the location of supplier? USA. What is the place of supply? That is also USA, where the training is done, right? We will not be even have to pay any GST here, right? My location of supplier and place of supply happen to be outside. There is no GST that will come. I should have the destination here at least, right? Okay. To call it as at least an import of service, place of supply should be in India. So no GST applicable on this. Then, Doom Events Limited, an event management company located and registered in Karnataka. So location of supplier here is Karnataka. Doom Events had organized a cultural event in the month of May for Daira Limited in Dubai. Okay, they paid a cultural event and the event was happening in Dubai. Daira Limited paid a sum of 10 lakh to Doom Events for the same. Okay, the question is, what is the place of supply for this? 12 subsection 7 talks about organizing an event. It says that if it is B2B, place of supply, location of recipient. Where is the recipient location? Okay. So it would be what supply? Interstate supply, IGST of 1,80,000 would have been applicable. Understanding? Okay. But it is happening in which month? May month. Okay. So that is also something that you will have to remember. Okay. So B2B, B2C. Do you want to see the place of supply provision there? Yeah. Yeah. We are not asking any question right now. We are just computing all that now. We have the question ready. If the question is asking April, we'll not include this. Very simple. But there is one, if you remember, if you read the question, you should remember that. That's the whole idea. There was a question about is GST payable on this? They did not ask you monthly computation there. They ask you, is GST payable? What's the place of supply? There was 5 options given in that question. We will not. This is an MCQ question, right? Yes, yes. If the computation is asking you for April, it will not come for that. Likewise. Okay. That you have to be always careful when you compute the month. Your time of supply would come super important for you. Okay. Now let's look at the provision for you once, just for the understanding sake, we can look at that also. We are talking about this provision. 12.7. Okay. Look at this. When will I have 12 applicable in IGST for place of supply? When location of supplier and location of recipient are in India. There, if there is organizing an event or assigning sponsorship to the event mentioned in 12.6, it says if it's B2B, location of recipient. If it's B2C, if where event is held, if the event is in India. If the event is outside India, then it will be location of recipient again. This is the provision. In our cases, it is B2B, so it will be Kerala. Okay. Then rates of GST, we know there is no opening balances, no outward inward transactions apart from whatever given in the month of April and May. Then, based on the facts in the given cases above, choose the most appropriate. Now we have to choose the answer. First, which of the following activities or transaction undertaken by Daira Limited do not amount to supply? Supply of steel sheets in territorial waters, is it a supply? Yes. Okay. Territorial waters would be what supply? We have already computed that. Yeah, this is the case. We said it's CGST, SGST would be applicable. Then, computer being used for business purpose given free of cost to unrelated person, is it a supply? Not a supply because no ITC was taken. Supply of paper rolls for printing question paper to Fraud Mount Senior Secondary School, is it a supply? Yes. Okay. Is it taxable supply? Yes. Recovery of bond amount from outgoing managing director, not a supply. We said the same understanding of liquidated damages. There is no explicit or there is no expressed or implied contract for it. So what are the items which are not a supply? What are the items? 2 and 4 are not a supply. So what will be the answer for us? Option A would be the answer. With me? Then. Which of the inward supplies received by Daira Limited in the month of April are taxable under RCM? Services received from independent director? Yes. Accommodation services? No. Arbitral tribunal? Yes. Machinery purchased from the dealer? No. Salary paid? No. So what are the options available? 1 and 3. D is the option. Compute total GST payable on outward supplies before setting of ITC. Do I have to add RCM here? No. Only on outward supply. What is my outward tax liability? Let's compute from there. We have already done that, no? What are the outward supplies that we have? IGST 2,70,000. Then CGST, I have CGST here, 54 plus 44,100. How much will be that? 90. CGST 98,100. SGST also 98,100. IGST is, how much is IGST? 2,70,000. So which is the correct answer? B is the correct answer. With me? Okay. Compute total ITC admissible to Daira Limited for the month of April. How much is the total ITC available for them? Let's look at how much is the ITC available. Which month we are asking this? April. They are asking for April. Okay. So which will not include that May one. Okay. First one, in this independent director, there is 54 RCM, I will get ITC. Plus there is 63 I will get ITC. Both of these are April. Okay. Then rest salary is not a supply, missionary we will not be able to take ITC. So rest of the information are May. So what is the only ITC available? 54 plus 63 makes it 1,17,000. So 1,17,000, 1,17,000 and nil for IGST. This is my correct answer. With me? Okay, then. Whether GST is applicable on the event organized by Doom Events, Karnataka? Yes. What is the place of supply? B2B, location of recipient. What is the location of recipient here? Kerala. GST is applicable, place of supply would be Kerala. This is the option you want to pick. With me? Then. How shall the amount paid towards training expenses of employees of Daira Limited be treated under GST? Is GST applicable or GST is not applicable? Not applicable. So what are the options? Let's read. No GST applicable on the transaction since training was imparted in San Francisco, that is place of supply outside India. Then B, GST is applicable on the training expenses and is payable as IGST since place of supply of training is registered person located in such registered person. No. So what is the understanding of it? Option A would be the one. Since place of outside India and location of supplier is also outside India, GST would not be payable. Understanding? Okay. Those are the 6 questions. With me? Okay, let's look at the next one. Can I go to the next case study? Alpha Cargo Private Limited, a company registered under GST in the state of Rajasthan, is engaged in supplying services of transportation of goods. In addition to its head office registered in Rajasthan, the company has also obtained registration in other states where it is operating as supplier of goods transportation service. During the month of January, following transactions were undertaken. Okay. Now you understood how you will read for the exam. Now we don't have to do it. We will just go through the whole thing. Revenue from service of transportation of goods provided to registered person is 70 lakh. Revenue from supply of goods transportation services provided to Doob Garments registered in Rajasthan for transport of goods into Japan is 18 lakh 10,000. Company paid rent to local municipal authorities of respective states for its offices located in different states as mentioned below. Rajasthan 50,000, Maharashtra 75,000, Delhi 25,000, Gujarat 40,000. The invoice was issued by the local municipal authority in these states to the offices of the company located in respective states. There are 5 independent directors. Again, they're testing an amendment here. They're testing some RCM. They are testing something relating to guarantee by the director. There's an additional amendment on the guarantee that they have. Okay. There are 5 independent directors of the company, all based in Rajasthan. Sitting fees paid to each such a director during the month is 25,000 from head office of the company. 25,000, 5 directors, independent director sitting fees. Out of these directors, Mr. X, a chartered accountant and an independent director of the company, is also a partner in ABC LLP, a chartered accountant firm in Delhi. Okay, this firm, ABC LLP, provided professional services to the company during the month. LLP has issued an invoice of 1,50,000 on the head office in the month of January. Another independent director, Mr. Z, on account of his long-term relationship with Alpha Cargo Private Limited, has provided personal guarantee of 1 crore to Bandhan Bank for the loan taken by the company during the month of January. He has not charged any commission or brokerage for the same. Okay, so he is not supposed to charge also. Personal guarantees, you are not supposed to take any commission as per the RBI provisions. Okay, so then company obtained services of Mr. Y based in Rajasthan, who is providing agency services for payment of annual road tax payable to government for the vehicle owned and operated by the company. Mr. Y issued an invoice amounting to 10 lakh on the head office. Such amount includes 9,50,000 as an amount of road tax paid on actual basis, and it is indicated separately in the invoices, and 50,000 as fee for Mr. Y for the said service. What is the concept they are trying to test you here? Pure agent. Okay, so they are trying to test you rule 33. The company has also paid an amount of 5 lakh for the event relating to goods transportation industry in the state of Rajasthan as sponsorship amount. What is the provision that we have in sponsorship? RCM. Any person providing sponsorship to body corporate partnership LLP will be taxed under reverse charge mechanism. We had a provision like that. That's something that they're trying to test you. Okay. Then the company registered as Goods Transport Agency has opted for payment of GST on goods transport services on forward charge basis. They have gone for FCM. Okay, so no worry of RCM here. That's a good news. Then, in the month of February, Rajasthan office of the company has following balances in. You must have seen a lot of question where you have balance in credit ledger. Now there is a balance in cash ledger. What are they going to do with the cash ledger balance? They can take refund, they can transfer to other, major head, minor head. So I'll recap that provision also for you because there's an amendment there. Then they said tax available in these heads are 25, 20, 20, total is 65. Interest available in these heads are this much. Okay, in electronic cash ledger, they are talking about the minor heads that is available. These are the major heads that is available. Okay, then all the amounts given in the scenario are exclusive of GST unless otherwise provided. The opening balance of input tax credit of Alpha Cargo Private Limited for the relevant tax period is nil. No opening ITC. With me? Then GST is payable wherever applicable on all inward and outward supply in the aforesaid scenario in the following rates unless otherwise specifically given. 9, 9 and 18. Please note they are giving you 9, 9 and 18 for all the cases. Even GTA, FCM, take it as 9, 9 and 18. Not 12%, 5%. Don't even think about that. Questions if given, take that. Okay. Even though that might not be the correct rate, we will just take whatever is given. Then, based on the facts of the case scenario given above, choose the most appropriate answer to question number 7 to 11 below. Shall we? First question. Total amount of GST payable before setting off ITC by the company including GST payable under reverse charge for the month of January for all location. Total GST for all location. Okay, they have given you 4 options for total GST. Then let's read the rest of the question also so that we will have an idea what to expect, where to go search. In February, after paying all its dues for the month, Rajasthan office wants to transfer certain amount using PMT09. PMT09 is used for what? To transfer your amount from electronic cash ledger, one minor head to another minor head under the same major head, or one major head to another major head, any minor heads. Now there is an amendment which said for CGST and IGST from one cash ledger of a GST number can be transferred to CGST and IGST of another GST number of the distinct person. But SGST cannot be transferred. There's a provision like that. That's what they're testing here. They're asking, they are transferring something. What is that they're transferring? From tax of IGST, they transfer 12,000 to CGST. From tax of IGST, they have transferred 12,000 to SGST of their office or some other office. Their distinct person, Orissa. We are now discussing about which office? We are discussing about Rajasthan. I will discuss, don't worry. I will show you the notes. We have to anyway find out the answer, no? Without looking at the notes, you will not give me correct answer. So I'll show you that. But this is not a recent amendment. This is the previous attempt amendment. Okay, that's why you might not find it as an amendment somewhere, but I'll show you that. Then, from interest minor head, under the major head of CGST 3000 to IGST head, and SGST 3000 to IGST head of Orissa office. Balance under all heads of electronic cash ledger of Orissa office is nil at that time. Balance was nil. So whatever transferred only they'll get. They're asking the balance of tax under CGST, SGST, IGST, CGST, SGST heads of electronic cash ledger of Orissa office and interest under CGST, IGST, CGST, SGST of electronic cash ledger of Rajasthan office will be what? Okay. Good that it is coming as a MCQ question. Okay. Computationally you will have to write a lot. They're asking after all the transfer, show me what will be the balances of tax in Orissa account and interest in Rajasthan account, existing account. So Orissa accounts is the transferee, right? The transferee accounts taxes after transfer, transferers balances in interest after transfer. Because one is Rajasthan, one is Orissa. So you should not compute both and then give. It will give you confusing options. Total amount payable to Mr. Y, including GST as applicable. What is the amount that is payable to Y? Y is the one who did some agency payment and stuff like that. Yeah, pure agent. That is a very simple question. Total input tax credit available to company on pan-India level. What is the total ITC they are asking? Okay, they are asking you to waste your time in computing. Lot of computation to find out what is the total ITC. 2 mark question it seems. Okay, so then the value of supply, but good thing, you will be able to have a confirmation on when you get an answer, right? Even if you get a wrong answer, you will feel that it's confirmed, but still you will know that, okay, something is matching I'm getting, so it's a good thing about it. The value of supply of services for providing personal guarantee by Mr. Z to Dandan Bank for sanctioning of credit facility to the company is, see, they have given you understanding of that amendment they are asking. Nil, since it is not a supply under GST. Nil, service provided by directed to the company is deemed as supply even without consideration under Schedule 1 of CGST Act 2017. However, since RBI guidelines, no consideration can be paid to the director by the company for providing guarantee. Open market value will be 0. They have just copy pasted the circular in an option. Okay. So you know the answer, like, so sometimes the answer is available there with you. Okay. 1% of the amount of guarantee, that is also there in another provision, but that is only when company to company guarantee happens. Okay. 10% of the amount of guarantee, no. Okay. We'll come back to, I'll show you the circular clarification for guarantee also for you. Can I? Shall we first go and then compute the first one? GST payable before ITC, including all RCM. Shall we start computing? Okay. So I want you to have the numbers scribbled somewhere. You can write so that when you go back and then check the RTPs, I want you to check this once, spare another half an hour after our classes are over to go through the RTP so that you're like, okay, this much I know. Because they say that 10% of RTP is being repeated. So I'm telling you also the related provision so that you get some kind of a variation also being aware of. Then, let's first look at what is the liability. First, they are under FCM, so their services provided to everybody would be taxable unless it is exempted anything specifically. First, revenue from transportation to registered person. It is not other than specified and all that, so it would be taxable. How much will be the tax liability? What will be the tax liability? 70 lakh. They're asking you in total only, right? Their question is asking you in total only. They're not asking CGST, SGST. Their question is for CGST, SGST only for ITC part. So we can do this because we don't know intra or inter, where did it is handed over to find out the place of supply. So we'll just total and find out. 18% of 70 lakh would be 1 lakh, 70 lakh, so which means 7 lakh, 10%, 18%, 14 lakhs, 14 lakh minus 1 lakh 40,000 is 12 lakh 60,000, right? I'm just computing the math in my brain. so it is 12 lakh 60,000. That is the outward tax liability here. Then revenue from goods transportation to Dhoob Garments, Rajasthan, for transporting goods to Japan. Would it be taxable? Yes, even if you transport goods. Here there is a provision that they are trying to test. 12 subsection 8 IGST Act. The place of supply has been amended. That is being tested here actually. Whether you know it or you don't know it, they are trying to test you there. Because it's an MCQ question, no? From RTP it's very difficult to identify what is the reason they gave that answer. Okay, for that I will explain you this. So 12 subsection 8 is amended. I will show you 12 subsection 8. Okay, give me a moment. Let me show you that. What is that amendment in 12 subsection 8? What is 12 subsection 8 talks about? What is the place of supply when you do transportation of goods including mail or courier? The amendment is this. The place of supply is very simple. If it's B2B, again section 12 will be applicable when both supplier and recipient are located in India. Since both of them are located in India here, Rajasthan, it would be 12 subsection 8, and in 12 subsection 8 they say if it's B2B it is location of recipient. If it is B2C, where the goods are handed over for delivery. Okay, where the goods are handed over for transportation, that will be the location. Earlier there was a provision, if the goods are transported outside India, it used to be location, destination. That is amended. That provision is omitted. This is removed from 1st October. Now what is the place of supply? Place where it is handed over itself. So it would become what supply for our example case? What is our case? This is, what is the place of supply? It will be Rajasthan itself. Would it be taxable? Yes, it will be CGST, SGST. But we don't need that, so we'll just compute the total. 18 lakh 10,000 into 18% would be how much? 3 lakh 25,800. So that testing amendments there also indirectly. Okay. Then company paid rent to local municipal authorities. Municipal authorities. Thank you. Okay. So company paid rent to local municipal authority. What is that we have learned about renting? I told you the moment you hear the term renting, you go to my chart where I taught you the renting. What was that chart saying? You remember the chart? I have copy pasted that chart for you in our notes yesterday so that you see it at your end. Whenever you want to look at the chart, no? I wanted the chart to be there in the PDF. This was the chart. Okay, I copy pasted in that, uploaded in tax school. It says, renting of immovable property, if it's a commercial property and rented by government or local authority or legislative assembly, now it includes parliament, tribunal, court, you remember? All of them. If they rent out a commercial property to a registered person, who is liable to pay taxes? Registered person, RCM. Now, coming back to our question here. Companies paid rent to the local municipal authorities of respective state for its offices located in different states as mentioned below. Okay, so respective states, are they registered in respective states? Yes, yeah. So it will become local authority providing renting of immovable property to registered person. It would be taxed under RCM. All of this would be under RCM. Understanding? Okay. So all of this would be under RCM. What will be the RCM liability for me? Total would be how much? Total is 1,90,000. What taxes would have come? Can I do CGST, SGST here? 17,200, 17,200. Why am I doing here CGST, SGST? Because ITC they are asking split. Only total they are not asking split. ITC they are asking. For ITC I will do this. What is the total? 34. Sorry, 17, not 200, right? Okay. 17,100, 17,100. Total is 34,200. Okay. So for me, 34,200 is enough for this. This is my RCM liability. So respective states, I would have paid CGST, SGST into that, and I would have taken credit there. Okay. Is it clear? Okay. So this you would have understood. This is RCM. Your which notification? No, because what is the place of supply for the respective state? Local municipal authorities of respective state. That municipal authority is the supplier location. The recipient is respective state only. You're understanding? Okay, so in Rajasthan it would have been 50,000 into 9%, 9% RCM paid. Maharashtra it would have been Maharashtra, they have a registration. Maharashtra also CGST, SGST, likewise. Okay. So I'm basically adding, I should not add, but I'm adding all the PAN CGST, SGST together. This would have been separate CGST here, separate CGST, SGST, separate CGST, SGST. But if the question is adding all that, they're asking you ITC on PAN level. Look at this. You read the question, right? The question was asking you ITC on what level? What is your ITC? What is the ITC available on? I underlined that word. That is my memory. From there only I said, it's pan India, right? Why don't I add everything? I will be able to do that. Okay. We are scribbling and computing. I'm doing that because in your examination paper also you can only do this. You will not write the whole tables, right? I'm scribbling and then writing answers here. Okay. Then independent directors. We will look at if there is any RCM. Yes. This is TDS is relevant for what reason? No, for that you need to have more than 2,50,000, right? It's all 50,000. So, yeah. And also, TDS provision is applicable when you provide services to government or local authority. This is government local authority providing to you renting. So, there will not be any implication for TDS here. It's opposite here, right? Yeah. Then, 5 independent directors in the company, all based in Rajasthan, and sitting fees paid to each of the director during the month is 25,000. So 25,000 multiply with 5, which is 1,25,000. These are 5 independent directors, all based in Rajasthan. So Rajasthan, it would have been what bill? CGST, SGST bill. So 1,25,000 would have had what bill? 9%, 9% would have been how much? Okay, this is 11,250, 11,250 makes it 22,500. With me? Okay, then. Okay, now let's look at out of these directors, Mr. X, a chartered accountant. So this is what liability? 22,500. RCM liability. Can I take ITC? Yes. This was what liability? RCM liability. Can I take ITC? Yes. Then, out of these directors, Mr. X, a chartered accountant and an independent director, is also a partner in ABC, and they provided services during the month to whom? To the company. LLP has issued an invoice of 1,50,000 on the head office in the month of Jan. So 1,50,000 would have had what bill? IGST. Yeah. The LLP, ABC LLP is the location of supplier. ABC LLP. Place of supply would be location of recipient, which is Rajasthan. ABC LLP is in Delhi. Delhi to Rajasthan would have been an IGST bill. Assuming it to be at 18%, would have been 27,000. Can I take ITC of this? Yes. Clear? Okay. But is it my RCM liability? No. This is what liability? It would have been FCM. I can take ITC. Okay. Is it my outward supply or inward supply? Inward supply. So not in my first computation, but I'm just consolidating everything now. Okay. Then another independent director, Mr. Z, on account of his long-term relationship with Alpha Cargo Private Limited, has provided personal guarantee of 1 crore to Dhan Bank for loan taken by the company. During the month of January, he has not charged any commission or brokerage for the same. Now, personal guarantee provided by the director. We are now talking about the amendment, Rule 28 Sub Rule 2. Let's look at the amendments there. Okay, let's look at the amendment here. Let's read it. Taxability and valuation of personal guarantee by directors and corporate guarantee by related persons for the company. This is what we are discussing now. Then, what about the personal guarantee by director? Since director and company are related persons, activity of providing personal guarantee by director to the banks or financial institution for securing credit facilities is treated as supply of service. Why? Because director and company are considered to be related persons. Okay. Director and company are related person. Thereby, if the director is giving a personal guarantee on behalf of the company, would be a supply of service even without consideration. Which para would come? It will be para 2, schedule 1. Supply between related persons. But as per RBI mandate, now ideally the moment it is related person, the valuation should come under which rule? Rule 28, right? We have discussed. Rule 27 would apply for the case of exchange. 28 is distinct person, related person. 29 is agent, right? This is how the valuation rule goes in. Now I should value by rule 28 ideally, but as per RBI mandate, no consideration can be paid to the director by the company directly or indirectly for providing guarantee. RBI has restricted the companies to pay any amount for the personal guarantee of the director. So will it ever have a value? No. So they said you can deem the open market value to be 0. That is the amendment that we have. So open market value can be treated as 0 and no tax is payable as per this amendment. So in this particular example also, the director, who's the director in our example? Mr. Z is given what guarantee? Personal guarantee of on the 1 crore loan taken by the company. Now what will be the valuation that we have? He has not charged any commission or brokerage. So as per the clarification, value would be nil. Okay. Is there any GST applicable? No. However, since we are discussing the amendment now, let us also discuss the entire amendment and then discuss about what about the corporate guarantee on behalf of related person by another company. What if another company, a holding company, has given a corporate guarantee? The situation is completely different. The provision like this: corporate guarantee provided to banks or financial institution by a company providing credit facility to the other company. Both are related persons. Or holding company to its subsidiary company. Two related companies, or holding company and subsidiary. If there is a guarantee that is given by one company on behalf of another company and they are related person, two conditions, then it would become a supply of service between related person and it will become supply even without consideration. But will there be consideration? Is there any RBI mandate to prohibiting other corporate? No. That's only there for director giving personal guarantee. So what will be the value that I should take? They said I should take the value as higher of 1% of the guarantee or actual consideration. That is why they have given you options there. If you look at, they've given you 1%, 10%, then they said it's not, but then this is what guarantee? Personal guarantee of the director. You guys understanding? Okay. So this would be value nil. So no GST liability there. Now let's look at the fifth point. The company obtained services of Mr. Y based in Rajasthan, who is providing agency services for payment of annual road tax payable to the government for the vehicle owned and operated by the company. They issued an amount of 10 lakh to the head office. Okay, so Mr. Y is in Rajasthan. They are providing, Y is the company, they are providing services of agency services and they have paid some road taxes, also added their bill. The bill given is 10 lakh, which includes 9,50,000 road tax paid and actual basis indicated separately. That will become pure agent payment. Should it be included in the value or excluded from the value? Excluded from the value. So what will be the value? Only 50,000. So on this 50,000, this is their inward supply or outward supply? Inward supply. What will be the GST that would have been paid? Both of them are Rajasthan. Inward supply GST would have been how much? CGST, SGST? 4,500, 4,500. Can they take ITC of this? Yes. On this 9,50,000, this is excluded from value. Then, company also paid an amount of 5 lakh for the event related to goods transport industry in the state of Rajasthan. Sponsorship is provided for an event. Okay. Event related to goods transport industry in the state of Rajasthan, a sponsorship amount. Would there be GST applicable on this? Yes, this would be taxable under RCM. Since it is there in Rajasthan itself, it would be CGST, SGST of 45,000, 45,000. Right? Okay, so this is RCM, CGST, SGST. Can I take ITC after I pay this? Yes, no problem. Okay, now no other information is relating to liability. So let's try to understand the first question's answer, which is total amount of GST payable including RCM. What are the GST amount? Can you total it up for me? First, 12,60,000. Then 325,800 plus 34,200 plus 22,500. That is FCM, no taxes there. That is inward supply. Then there is 90,000, right? This is the total of this, right? How much will be that? $17 lakh. $17,32,500. Did you get that? Let's try to add it up once again. 12,600 plus 32, 3,25,800 plus 32,400 plus 22,500 plus 90,000. How much? 17 lakh 32,000. That's your correct answer. D is the correct answer. With me? Then interest one I will show you. I will come to the 8th question, but before that we already have information for other questions. Okay. 9. Total amount payable to Y. How much is the total amount payable to Y? Value would be how much for Y? 50,000, right? Y is having only 50,000 as value. GST would be how much? 9,000. 4,500 plus 4,500. Okay. So 9,000. Then we would have made a pure agent payment of 9 lakh 50,000. Total would be 10 lakh 9,000. Am I correct? Okay, 50 is the only value on which I should charge levy GST. Should I levy GST on entire 10? No. So how much would I pay to him? 9 lakh 50 plus 59,000, which will become 10 lakh 9,000. Let's look at if there is an option like that. Option D, 10 lakh 9,000 would be the correct answer there, total amount. That's a very simple question for a 2 marks. Okay, nothing. Even if you don't read the entire stuff, this would have been like a correct answer for you. Then, how much is the total input tax credit available to company on PAN level? Let's look at it. What is the total ITC for me? It's an interesting computation I am going to do. Let's look at the ITC. First one is outwards, so add it up. Let's look at ITC. $34,200, 1. That is CGST, SGST, right? So I should not do 34,200. I should rather do what? 17. Let's first compute CGST. Let's compute CGST, SGST, then we will come to IGST. So 17,100 plus, how much is the total of CGST, SGST, IGST? I will do the total for you because it's a long question. I don't want you to miss out. 17,100, 17,100 first. Then 11,250, 11,250, right? Independent directors. Then there is an IGST of 27,000 on what? This ABC LLP. There is an 17,100 first, 17,100. Then we have added 11,250, 11,250. This is correct, no? Then we have 27,000 because the chartered accountant firm has provided service of 1,50,000. That was what? IGST. So IGST have added 27,000. With me? Then there is no GST on the personal guarantee. Then there is 9,000. That's 4,500, 4,500. I can take ITC off. Okay, Mr. Y. There is 4,500, 4,500. Then there is 45,000, 45,000 on the RCM paid sponsorship. I can take ITC off. 45, 45. Is there anything else? I can take ITC off. No opening credit, nothing. So how much will be the total of this? 27,000. 77,850. 77,850. This is my ITC, including all the RCM ITCs. With me? Okay, now we have to search and pray that the option matches with this, right? That's what you do. 77,850, 77,850, and you should get 27,000 as IGST. Is it correct? Okay, that's also sorted. Next. Personal guarantee also we can answer outrightly. Value of supply of service of providing personal guarantee by Mr. Z to Dandan Bank for sanctioning credit facility to the company is, how much will be that? It will be nil. Is it because it's not a supply? No, it is nil because it is a supply, because it comes under schedule 1, they are related person, it is supply even without consideration. Now I have to take open market value because RBI says that the director cannot get any consideration. Open market value is deemed to be nil. So what is the correct option? Option B is the correct one. With me? Clear? Next. Now we have that one thing that we have left. What is this minor head, major head? Let's go to the notes first. Otherwise, you will not be able to. If you know the amendments, then it would be an easy one for you to compute. But we'll have to compute correctly and then match with the commission for what? Cannot charge. RBI prohibits you from charging. That's why they are taking it as name. But for company to company, they can charge. If they charge that or 1%, whichever is higher, that will be the value. Yeah, either way, both of them. For any personal guarantees that you can take, you will take the value to be 1% or the amount charged, whichever is higher. That's updated on the valuation rule. Then, now let me teach you the provision first. We are there. Look at this. Transfer of amount reflected in electronic cash ledger. Registered person can now transfer amount from one major minor head to another major minor head. What is a major minor head? In your challan, you would have seen this. In your challan, you will have major heads which are CGST, IGST, SGST or cess. These are called as major heads. Every major head will have 5 minor heads like tax, interest, penalty, late fee and other. By wrongly you have put an amount into while generating challan to put into cash ledger. By wrongly you have put it into tax instead of interest. You can always transfer in between. Okay, that is done using a form called as PMT09. From one major head to another major head, one minor head to another minor head. Interest in CGST to tax in IGST also you can do, no problem. Now they made a further amendment on that and they said if there is no unpaid liability, that's a condition. If you don't have an unpaid liability, in electronic liability register, amount available can be transferred to electronic cash ledger of a distinct person also. But that is given for Electronic cash ledger has CGST in a GST number in Andhra Pradesh, say for example. You can transfer it to CGST or IGST of a distinct person under same PAN. This is what the provision says. Okay. Let's look at a material to spot that. Look at the provision from your material also. A registered person may, on the common portal, transfer any amount of tax, interest, penalty, fee or any other amount available in an electronic cash ledger to electronic cash ledger of central tax or integrated tax of a distinct person. What is they saying? They can only transfer to central or integrated taxes of a distinct person. No liability shall be allowed if the said person has any unpaid liability in his electronic liability register. This form can be used either for transfer of erroneous deposits under any minor head or major head to any other minor head or major head, or transfer of any of the amount lying unutilized under any minor heads in electronic cash ledger, or transfer of any amount lying in electronic cash ledger to electronic cash ledger of CGST or IGST of a distinct person. What is not possible? SGST transfers are not possible. So SGST can be only transferred within the same registration. You will not be able to transfer it to another registration. Okay, with this thought process, let's go back and then look at that question. Okay. You understood what is the transfer that is allowed? Okay, now what is that they're doing? What is that they have? This is the balance that they have. IGST, CGST, SGST. This is the balance that they have. Now they're saying that they have transferred from tax under IGST of which registration? Rajasthan. In February, after paying all dues. Is it important for you? Yes. If you have an unpaid dues, will you be able to transfer to another distinct person? No. My own branch I have one registration in Tamil Nadu. I have amount lying in my electronic cash ledger in Tamil Nadu. I can transfer this amount from electronic cash ledger in Tamil Nadu to my own PAN GST number in Karnataka, provided I have zero liability payable yet. After paying all the liability here, I still have money deposited. Why would I refund and then create another challan? You can do a transfer. But that is not allowed with SGST of Tamil Nadu to another state is not possible. CGST and IGST can be used for transfer. They're saying after all the dues of Rajasthan is paid, they want to transfer certain amount using 09 from its electronic cash ledger to electronic cash ledger of Orissa office. It wants to transfer tax of IGST of 12,000 to CGST head, IGST tax of Rajasthan to CGST of Orissa. Is that allowed? Yes. Disallowed. No problem. Then IGST of Rajasthan of another 12,000 to SGST of Orissa. Can they do that? No, that is not allowed. IGST of Rajasthan to SGST of Rajasthan they would have done. That is okay. But what cannot be done? To a distinct person only, central government transfers are allowed. Not back-end transfer is not there. State to another state is not there. Central to state only is that transfer is allowed. Okay. Then, so this will not be possible. So how much will go? Only 12,000 will go from IGST, 25,000 is there. Can they transfer more than 25,000? No, whatever is available only they can transfer. Out of this, how much would have been transferred? Only 12K can be transferred. That other 12K to SGST is not possible. So how much will Orissa will get? How much Orissa will get in terms of taxes? Only CGST of 12,000. So Orissa will only get CGST of 12,000. What is the split of? This is IGST, CGST, SGST. So they're saying 12,000 of IGST transferred to CGST is allowed. So Orissa will get how much? 12,000 of CGST. So what is the correct? These two seems to be correct. Both of them have 12,000. However, can they get SGST of 12,000 also? No. So which means that this is not possible. We got the correct answer because that's the only possibility that we have. But we need to reconfirm with interest also. Okay. We should know how. But if you know one part of this answer also, you will get the whole option correct. Then let's look at interest. Interest of minor head from CGST. 3K from CGST, Rajasthan. I'm transferring it to IGST of Orissa. Is it allowed? Is it okay? Yes, that's okay. Then 3K of SGST, Rajasthan to IGST of Orissa. Is that okay? No, that is also not possible. So what is the only one that is possible? Only the first 3K. So what 3K would go? From CGST interest, 3K would go. This would be 3K gone to Orissa. So how much will be the balance in CGST for interest? Nil. So what will be the balance of interest in Rajasthan? 2K IGST, nil CGST, 3K SGST. This would have been the balance. The question is asking what is the balance? In whose balance? Are they asking Orissa's balance? No, they are asking Rajasthan's balance after transfer. First one they were asking Orissa's balance. Second they are asking Rajasthan's balance. Orissa's balance is asked for taxes. Interest they are asking the balance in Rajasthan. Rajasthan balance would have been 2,000, nil, 3,000. Let's see if the amount is correct for us. 2,000, nil, 3,000. This is IGST, CGST, SGST. With me? This is the balance in Rajasthan. This is the balance in Orissa. This is tax. This is interest. Understanding? This is the question that they are clubbing with amendment. Okay, now let's quickly look at question number 12. Miss Parvati, an Indian resident who has on a visit to USA returned after 1 year for contesting in assembly elections of her state. She was carrying with her the following items. What the question is this? What question is this? Baggage rules. They're asking customs, what is the baggage rules? Okay. Now that you don't have duty drawback in your syllabus, baggage will become an important area where they will ask a computational question. Okay, now do you want to go through the provision first or the question first? We'll do question first. Okay. Personal effects 59,000, laptop computers 37,000. Who's bringing it? A lady passenger. Okay, so there is some provision that is giving you additional baggage rule for lady passenger and gentleman. They have used the word gentleman in the act. So, okay, so if they travel after 1 year, then there is an additional allowance they get for jewelry. Okay, so there is an additional allowances. Yeah, 50 grams up to this much of amount they have given 1 lakh for the lady will get little extra, the man will get little lower. Okay, half they'll get. Anyway. Personal effects, laptop computer, there is an additional notification for laptop, you can carry one, that is there's one provision like that. Then, music system is included in your general duty free allowances. Okay, what is the baggage rule rate? 35 plus 10% social welfare surcharge. So, effective rate will become 38.5%. Okay, then. Compute the customs duty payable by Parvati with reference to baggage rules 2016. Ignore agriculture and infrastructural developmental cess. Only social welfare surcharge we need to add. Okay. Can someone confirm me on the audio? It says the audio is not working fine. Can people on the Zoom confirm me that? It's audible. Okay. It is having its own behavior. Okay. It is doing its own work. What are you doing? I think artificial intelligence is going to take over us. So, I don't know what's the problem, but looks like okay, so let's come back to this. Okay, so they're asking baggage rules. So we'll have to compute what will be the amount. This is also an MCQ question, so we'll have to just find out the amount out of that. Yeah, let me just quickly recap for you what is the relevant rules out of this. Sorry, I'm not very sure. My notes is not what is showing in the. I'm trying to get the correct one. We will have to figure out. I think you should call somebody. Just come. Sometimes some messages comes like audio is not proper. It goes off and on. Update open, yeah, open. So you can get system on that message vartha. Speaker connect அப்படி ஒரு மெசேஜ் வந்துருக்கு. மெசேஜ் இதுக்குள்ள இது தனியாக வந்து இது ஜூம் அவுட் ஆகி அந்த ஓபிஎஸ்ல போயிடும். திருப்பி வந்து அது லிங்க் ஆகும் சிஸ்டத்தில். Can I? Okay, so let me quickly give you a recap of baggage so that any other question comes also you'll be able to answer. So look at this. So baggage rule 2016 says you will have to pay taxes on the baggages. Baggage is also considered to be part of goods. When you take a baggage from outside India to India, it is as good as you're importing goods into India. The rate of baggage is 35 plus 10% social welfare surcharge, 38.5. Normally you have IGST on top of customs duty plus social welfare surcharge, but in terms of baggage IGST is exempted. That's why we are not charging IGST on top of it. No IGST or cess applicable on the baggage. Even though I have told you some rates like this, even though I have told you something like this as 38.5 to be the rate, there are certain products like firearms, cartridges for firearms exceeding 50, cigar above a limit, all of these are taxed at 100%. Okay, it's not 38.5. That's your general understanding for baggage. Now let's look at what is the baggage rule that is talking about. Okay. So if you look at article used for a specified period of time, which we call as personal effects, are not subject to duty. So you will get full exemption on the personal effects. Similarly, you will get full exemption on gift or travel souvenirs also. When you are bringing from outside India, either with an accompanied baggage or unaccompanied baggage, either way you get an exemption. Okay. So there is also, apart from a blanket exemption for personal effects and gifts and souvenirs, you do have an additional exemption available called as general duty free allowances. Okay, now let's look at what is the general duty free allowances that is given in your rules. Rule 3 says an Indian resident or a foreigner residing in India or a tourist of Indian origin excluding infant, somebody who is less than 2 years, excluding them, everybody who is an Indian resident or a foreigner residing in India, if they are coming from outside India other than NBM. What is NBM? Nepal, Bhutan and Myanmar. Other than NBM, that's what we say. If somebody is coming from other than NBM, they'll get a general duty free allowances for 50,000 rupees, excluding items in Annexure 1. Annexure 1 items you will not be able to get anything. Okay. Now if rule 3 and rule 4 talks about foreigner who is actually somebody in foreign origin or somebody coming from NBM, these people will get a lower duty free allowances. Your duty free allowances will not be as high as your 50,000 is what the general understanding that you need to have. So a tourist of foreign origin and an Indian resident or foreigner residing in India. So in our example, is this person who's coming from US an Indian resident? Yes. So their general duty free allowances would be how much? It will be 50,000. Now let's look at what is Annexure 1. They said Annexure 1 will not be included. Annexure 1 says about firearms, cartridges, cigarettes, cigar, tobacco, alcoholic liquor more than 2 liters. And when you say cigarettes, up to 100 grams can be brought in inside general duty free allowances. Cigars up to 25 grams can be brought in. Tobacco 125 grams can be brought in. Cartridges up to 50 can be brought in. Firearms will not be allowed to be brought in inside general duty free allowances. Likewise, beyond these limits, alcoholic liquor, cigar, tobacco, cigarettes cannot be brought inside within that 50,000 limit. Then gold, silver or any other form of ornament, any gold or silver in any form other than ornaments. Ornaments can be brought in, other gold or silver biscuits and things like that will not come under the general allowances. Your LCD, LED, plasma TVs will not come under. It's not yet updated. They need to work on this, baggage rules. They have not done that. They have not put the efforts into it. So the law itself looks very funny when you read items and all that in Annexure. But these items, whatever mentioned in Annexure 1, will not be allowed under general duty free allowance. In GFA, it will not be included. Okay. General duty free allowances, it will not come. Then, so in our cases, there is one more additional rule that is there. There is something called as Rule 5, which talks about jewelry allowances. What is a jewelry allowance? They are saying that if a person is residing for more than 1 year, a gentleman will get 20 grams up to 50,000 as allowances, and a lady passenger will get 40 grams, value maximum 1 lakh. Okay. Now with this, is this included in general duty free allowance of 50,000 or plus this will be available? Plus this will be available. So it's an additional allowances that they get. So these two sections, if you go and understand and come back to the question we were discussing. Miss Parvati, is it a lady passenger? Yes. Residing more than 1 year? Yes. So will she be available to have the will she be available to have the jewelry allowances? Yes. So jewelry 25 grams, 67,000. It's less than 40 grams, less than 1 lakh. Will she be getting that allowance? Yes. Would it be taxable? No. Similarly, there is an additional allowances that is available as a notification. Look at this notification. One laptop computer imported into India by passenger of 80 years or more other than member of a crew will be exempt from customs duty. So thereby that particular provision also will be applicable in this case. So this no customs duty. Laptop also, because of the notification, no customs duty. Personal effects is fully exempted, no duty. So what will be subject to the duty? 1,25,000 minus she, considering an Indian resident, will get 50,000 general duty free allowances. So taxable value would be how much? 75,000. What is the rate? 38.5%. So what will be the amount? 28,875. That should be the option that we have. This should be the correct option. With me? Okay. So for me, like your baggage would actually become a little important for you now, considering in customs not much areas are there to question. And see, customs is very easy to study. Study all the previous year questions. Get a scanner or whatever, because customs was already there even in the old taxes. When I was teaching people, so it's been 10 years since I qualified. So I've taught people initially customs, service tax, excise duty and all that. And at that time also customs questions used to be this. So you can basically go and then pick all the questions in customs, get a scanner and then do all the questions there. You will find only like some 10-20 questions available. Okay, I have a summarized question bank. If you guys want, I can share you the PDFs also. Okay, so that question, everything you do, nothing more than that. This question is also there, nothing new that they're asking. Okay, so now we have bigger questions available. So that concludes our MCQ portion. Now RTP has your ITC question. Now I thought about revising ITC. Now what I thought is that I'll do the question and then do a revision for ITC, but we'll take a 10 minutes break.